Kanishke Mannakkara is Group Chief Operating Officer at CAL, but he's here at the table because he represents the buy side as Chairman of CAL Investments. That's the asset management arm of the group, Kanishke. Thanks for being here. So we've heard two views, fairly. Uh, if you were to add something to what's already on the table about the factors you think will shape the investing environment for equities, what would those be?
At risk of repeating what my colleagues have already said, I also agree. I think there's a lot of upside. It's driven by, I'd like to, I guess, yeah, sort of two things that I always think about from an investment principles perspective. One is that, especially in frontier markets, you make the most amount of money when things go from terrible to bad. Market has gone up by 35%, but that's still early days. Expanding on that through a fact, adjusted for inflation, the ASPI today is lower than it was on the 9th of May 2009, which happens to be the day, well, the war ended with Prabhakaran's demise. So if you consider that, Sri Lanka today is a vastly different place, sure, the growth outlook is lower, but from an overall economy perspective, it's significantly higher. The stock market hasn't gone anywhere. That represents significant undervaluation, and that catching up that gap presents a significant upside in the very near term. For me, 12 months is near term. The second fact is that bad times lead to good policy, and good times lead to bad policy, often at a national level, even at a company level sometimes. And so the very bad times that we have gone through have led to, so far, good macro policy to get us out of this. Provided there is policy continuity, there can then be a period of growth and prosperity beyond the 12 to 18 month horizon that we're talking about here. And that could give further upside on equities. So for both of those reasons, I'm also very bullish.
Okay, so let me try to see the sort of untangle one or two of these. Terrible to bad, how do you make this distinction, that we are still that terrible versus bad?
No, I think we've gone from terrible to bad
already,
but
okay.
I would argue the equity prices haven't adjusted fully because 35% is nothing. In the grand scheme of things, considering how far we fell, considering there's been 70% inflation, 35% isn't much, and considering how far the market has fallen.